So as a direct result of this dollar, we've seen markets like wheat. I'm talking about wheat and all the grains, a lot of commodities for a long time. You know, these commodities are in the early stages of a commodity boom, and oil is struggling here, but it is nonetheless grinding up. It's been holding the daily 8-day average for a while now. If you look at a smaller time frame, let's go to a 3-hour chart. You can see we continue just to close higher here. So there's a potential squeeze breakout today. What's a squeeze breakout? Squeeze, in case you are not familiar with that. So the price is squeezed here. So if that price can continue just to eke higher, then I think we can potentially get a good move from that. Very volatile week otherwise. You see the Dow is really struggling up here at the moment. The work resistance up there, and the support is down there closer to 25. So with a lower close, so this is just really range bound, not doing a whole heap at the moment. At the moment, selling at highs, but then finding support and trying to push its way up. So a right little ding dong with the bulls and bears at the moment. But whereas the commodities have been a lot better. If you look at gas, talk about bad gas for quite a while now. This is gas on my daily chart. So we've hit a massive long-term trend line here, formed from November 19 highs, May 20 highs. So there's plenty of time to get into something like gas. I'll be calling this, well, I've been talking about this in my trading room for, well, I've been talking about it ever since this burst up here or the push up here. You can see the markings. I'm suggesting people buy that down there. There's a structural breakup in gas. So we've got a break up in gas at the moment, but we need a pullback. So if we've broken out of that trend line, it stands to reason that we might see a pullback to that trend line. Okay, so the pullback for that, let's break this down into more detail. Alright, so a lovely chart like that. So if you get a breakout pattern, the first thing I would do is I would fib that break. If this is the impulse wave 1, then the key area to buy into that is potentially, if it's very bullish, we may only get a retest of that breakup area at 1766. Otherwise 1730 is potentially a good area. So if this is leg 1, and that's the pullback for leg 2, then leg 3 could potentially find ourselves breaking up into, now leg 3 is normally the longest. So we could, if we can get through 20 is obviously a nice big number for that to try and get through. But if we can pull back to that 1730, 1775, then we could potentially break up to that 22. So if that is wave 2, then a pullback is potentially 2050, and then we could wind up with another leg to give us a 5-wave push to the upside. So if that works out, that would take us to so we had a gap up there at 2335. So if we step back from this, and look at the fibs on a larger levels. So just a while just talking about the potential for a wave 2 pullback on gas.
Yeah, I really missed that actually. I'm really upset about that one.
Yeah, well, there's plenty of time. If this is the impulse wave 1, then the pullback could be this breakup area from July 6th.
Okay.
So big pullback area. You know, that will be a 40% push back into that impulse range, which could then potentially take us as high as 2022. So there is plenty of time for that. Yeah, it was just such a major support level down there. Yeah, we breached that 1544 and immediately closed back on it. So we actually got a gap down here, haven't we? Yeah, from Friday the 26th, we gapped up on Monday into 1580. So yeah, that's the potential for that one. I will do a screenshot of that one because I really want to keep hold of that. Right, so that's gas. Let's plot. We've been talking about oil since a couple of you just come in the room since. Very quick summary of what I'm looking for in oil. I've been buying pullbacks and scaling in and out of this. I'm doing really well on oil at the moment, making up for a sloppy couple of days. We've got couple of minor mistakes on the Dow the last couple of days, which has cost me not very much money at all, because in this sort of volatility, I trade very light initially, but if something really sets up for a good break, then I will use I say full leverage, my normal leverage in the futures market. There's a couple of screen grabs of my futures market as it's pulling up at the moment. So this is a screen grab I took I've not even saved it, so I'll just, this is before I bought a pullback. So I had 400 and whatever there at the moment. I've since taken some off at these highs and bought a pullback. This is just one of my accounts because I'm trading it in 2 accounts. So just anyway, let's put that aside for a moment. Yeah, just looking, as I said before, just looking for this to eventually, at some stage, don't know how long it's going to take. Could take a couple of days, could take another week or 2, but I think we'll see 45, and then give us an opportunity to trade that one. So I'm just still, like I said, if I get something like that, I will scale in and scale out to maximize my profit potential. Right, let's move on to have a quick look at wheat, because wheat's done the same. So this is the pullback for wheat. Well, we've got a 1, 2, so we're in the process of seeing wave 3. So if I fib wave 1, there is still, there's plenty of time for these. These grains generally take a long time to get going, and then they start, but then they'll break up and push higher. So if we close up here, I would still look, I mean, $5 is a sensible place to buy a pullback on that, and then see if we can get 5.20, potentially 5.26. Ultimately, I'm looking for at least $6, potentially $7 or $8 by year end on this. There's plenty of time to buy a pullback on this. Don't chase the market. And my advice to you is do not chase the market. Wait for the pullbacks and you will be rewarded. If you start chasing the market, you will just chip away at your account and lose money. There is no point in doing that. The gold, gold is, we're talking about gold, started buying this at 1720. We are really slicing through that 1800. Where can we go? I think as long as the Fed keeps printing vast sums of money, then I think there are plenty of opportunity. So at the moment, 1855 is the next target on this one. And ultimately, I think we will head for at least $2,000. Who knows, maybe more. It's a decent breakout. If you want to get in on this, I would be patient and try and get 1780, 1790, 95. Obviously, if you're buying high, don't give it too big a stop. Otherwise, you're going to have to let this go and just wait for some strength in the dollar to drag that back. Look at the weekly chart on gold. That is a really nice pattern. So the last high was 1925. 2162, $22,500 is a possibility. Obviously, that's a big ask. So just wait for pullbacks and see if you can trade that up for some further pushes. Let's look at some stocks. Bear in mind what the gold is doing. Let's have a look at some miners. Been a bit late getting into this one. As you'd expect, Fresnillo, it's a lovely, lovely chart pattern there. That back in 2016, that was up to $2,000. So again, as it's a breakout, the most you can hope to get at the moment is 1865. So that's where it's really broken out from. So I would expect that to be tested. That is obviously your main resistance area up there. But again, plenty of time. There's some other ones. I know that this is still. I've forgotten the name. Is it called Prospect Gold? Golden Prospect or something. No, it's Golden Prospect, isn't it? There we are. This is one that you could alarm for pullback. So that's going to hit resistance. This is Golden Prospect on the LSE, London Market. The resistance is up there at 58. I think you can see the major, what was that, 2012 high was 100. That looks as if that's going to get to 100 at some stage. Could be 6 months, could be back end of the year, could be 12 months from now, I don't know. So don't rush, take your time. Let's buy a pullback, keep your stop out of trouble, and see if that one can push higher. Okay, and just do a couple of stocks. BT, I still want to see that 102. We're getting close to 102 now. I would buy that at 102 with a stop under 95. Don't want to repeat, so I've been shorting like crazy. Oh, this is a weekly chart, isn't it? Well, that's fine, that's fine. I would leave it for now. But any pullback, let's see, if that is wave 1, potential pullback for, yeah, 335. I would short that at 335, given the chance. Otherwise, now, so I'm talking, yeah, I like rolls here. Look at the daily. Yeah, that's just narrowly not, I had a alert down there at 251.5. It's not triggered it. I will start to buy that. I will start to take a position here with a stop under 250. Probably leave my stop under 240. You can spread bet this. You can trade it in CFDs. That's no reason why you should not do that at all. Just wait for pullbacks. Anybody trading? Who's trading stocks in the room? If anybody. If I've not got stock traders in the room, then I won't go on about stocks. I can see, we've got some weakness in the market at the moment. Right, okay, so that pullback in the Dow has got sold into, and the oil is struggling. You're up 70 in the Dow, good. Yeah, 950 was the place I was looking to get, suggested you get short. 954, that's 4 pips out. So that is working. So this is the 30-minute taken on the last range. So if we start to break down here, and we could potentially get to 25.6 and 25.5 at this rate. It's really, really struggling. Okay, so now there's some program, let me just take you to, you go onto my home page and then click the button for what are your biggest challenges. Now all of you guys in the room, I'm assuming, are already good technical traders, but that's 13th of July is intro to start trading. 15th of July is how to be a day trader. I'll send you the link for this. And so that's a free introduction. I'll be talking specifically about why to day trade, how to use low leverage to build a small account, and how to compound your account up using very, very little capital, using very small position size and relatively tight stops. So that's on the 15th. Now, gap trading. This is a 2-hour session on gaps. Gaps are really, really crucial. If you know how to monitor the gaps in these markets, it does not open a lot of doors to a lot of profits. So that is on the 14th of July at 6 p.m. For members, it's free. if you're not a member, it's £75. If you subsequently become a day trader, I will come on the Scalper School program. I will refund that £75 because this is a key part of Scalper School. Then we've got. I did a session on this last night with not enough preparation, so I am going to redo that to a much higher level and really give you a full, a proper lowdown on Elliott Wave. So that's going to be on the 21st. Okay, so I'm working with an American broker now, so there's going to be a lot more activity on a lot more sort of short programs like that. Okay, so this is a quick short half hour. Anybody got any particular markets they want to look at and talk about here? You can see how accurate this fibs is. I mean, they take it right to that fib level I've got marked up there, and subsequently this is just now all the highs are selling. So if we subsequently break down here, not sure, the markets are so range bound at the moment. I'm not sure that is going to break down at the moment, but you never know. That's the issue. My oil has pulled back, but not much, only a few pips. So if we turn around and put a bicycle on this 850, we could go back up to those highs. Right. Anybody else got anything else they want to talk about at this stage? Okay, so we've talked about gold, pullbacks in gold and the grains, the potential for oil on the upside. We've talked about, we haven't talked about the indices in a lot of details. I'll have a big look at the big picture in the indices. They are really struggling under that resistance, and the highs are selling. Engulfing bar off of that resistance yesterday. Resistance being that key there. So if we do lose our footing here and close under 25.7, then this is going to come tumbling down to 24.9. If we break out of that funnel pattern, then that has got a lot to, then we could really start to find that running down. At the time when Apple is still making all-time highs. Let's look at the NASDAQ in contrast. There we go. Yeah, it's a complete contrast to the NASDAQ. So tech stocks are still holding up. There's a lot of mixed messages in these markets at the moment. Great deal of mixed messages. So be careful. Right, I'm going to leave it there. So we talked about stocks, we talked about commodities, including oil, we talked about gold, and we've gone through the indices. So it's a quick sort of 30-minute run right through the main markets. We've looked at some elements of Elliott Wave and fibs as well. So keep an eye on those programs. If you want to really get in on these bigger moves, then you need to up the ante, up your skill level, and come in on those programs. Sunday is going to be the big picture. Sunday is going to be a really extensive look at these markets. I will send you a link to that now. Sunday's going to be the Sunday at 7. I do all the prep for the week ahead. So if you've not registered for that, here's the link. So hope to see you on Sunday. All right, thanks very much for coming. Click on that link now. and I hope to see you on Sunday. Thanks a lot, and good trading.